I'll dive right into BRP. This happened this morning, so I actually don't have any like solid notes on it, but just from quick reading this morning. So it's down 35%.
It's insane. Yeah.
Just last week I had talked about actually, yeah, it was last week. I had talked about kind of the blowout quarter that they had, and it was kind of a blowout quarter. Like the company
You
was doing
jinxed it.
very
You
well.
jinxed it, Dan.
I completely jinxed it. It's like what a wild, wild market this is. Like I don't know, just the ability to kind of cave a company like this. Well, it's because of tariffs. So what ended up happening was so they reported, and then on April 6th, there was an amendment to how the tariffs apply. It was in early April as to how these tariffs apply on their vehicles. So somebody looking quickly at like the numbers might notice like they had a 50% tariff before and now they have a 25% tariff. So like why is this negative? Prior to this, the 50% tariff was just on the metal content of imported products. Whereas now they've kind of just said we're going to tariff 25% on the total value of the vehicle. So it's huge. I think they expect it's going to hit the company in excess of $500 million. So, like I had mentioned last week, like this company was going to see a $450 to $500 million tailwind because of the inventories, how the inventories were normalizing, all that type of stuff. This just pretty much wipes that out and then some, effectively, because of the fact that their vehicles are going to be tariffed, the entire vehicle, and they manufacture primarily in Quebec. So a lot of their products are hit. And I mean, like, to me, that's kind of all I'll talk about BRP in general. But like, what does the company do if this doesn't go? The one thing I will say is like, if this, like Trump changes the tariffs, these tariffs change all the time. So like, I'm still holding because who knows next week, if they get rid of those large tariffs, the company probably doesn't see this type of headwind. But I mean, if they don't get rid of them, I mean, what does BRP do? Like, I they would have to move manufacturing to the US. Like in reality, like Trump, if this persists, like Trump is kind of getting what he wants here because how else this wipes out almost their entire earnings
One thing to keep in mind is I think the Kuzma or the free trade agreement is supposed to be, I think, talks for new
this summer.
negotiations. Yeah, or this year, so this summer. So that may be something that will be negotiated as part of that. So I could see a BRP doing a wait and see until then. Maybe if they get some assurances, I'm not quite sure how they would get those, but maybe if they get some assurances from whomever will be doing the negotiation on the Canadian front, that will be one of the items. I'm not quite sure, but that could be a silver lining because, of course, moving manufacturing to the US won't be a cheap endeavor for them. So there's gonna be some costs related to that, training the staff and the employees and so on. But you'd want to avoid that as much as possible. It's not great for those who are employed by BRP in Canada because clearly, if that happens, there's going to be a lot of job losses here related to that.
Yeah. Yeah, and I guess the final thing I'll mention is they suspended guidance as a result, which kind of gives me the impression that they don't really feel it's going to go away anytime soon. Other than that, like if they did, why wouldn't they just kind of wait it out?
Yeah,
As
but
now
I
they
think suspending guidance is probably prudent
yeah
because even if it might go away, they at this point you're suspending guidance because you actually don't know,
yeah you
right?
have
You're
no idea.
guiding because you have a general idea of where things are going. If you suspend guidance, just means you don't know, right? We saw that during COVID early on. A lot of companies were suspending guidance because they just didn't know where things were going to go. And I think that would be no different. I'm not saying it's going to be a good outcome. I'm just saying it's an uncertain outcome. And that's probably why they just pulled guidance.
So this one is very interesting. GFL Environmental is buying secure waste infrastructure for $6.4 billion. So the cost is for 24.75 per share for secure. So at the time of writing this, I would have wrote this yesterday. Secure is trading for around 22.77. I think it's still trading at a pretty big discount to the acquisition price, and I'll get as to why in a bit. But the acquisition will be 80% GFL shares and 20% cash. So if you own Secure, you can select all cash, all stock. or even a mix. And it is expected to close pretty quick back half of 2026. And this is expected to be immediately accretive to GFL, meaning it'll add to free cash flow per share despite the dilution. Now, it does say adjusted free cash flow per share. So I didn't really have time to dig into what type of adjustments would be made, but GFL is the fourth largest waste collection company in North America. So it's much the same as the other waste collection companies. Small tuck-in acquisitions they've made. I think it's just under 300 of them since being founded. The thing is, this is kind of far from a tuck-in. This is pretty sizable. GFL, I think, has a $20 billion market cap or so, whereas, they're buying Secure for 6.4 billion. And whereas a company like Waste Connections has around 90% exposure, 85 to 90% exposure in the US, GFL is around 65%. So much more exposure here to Canada and primarily in, I guess you could say, like industrial waste. So that's kind of what Secure specializes in as well. It doesn't have really the residential waste exposure like a Waste Connections. And where this does get interesting is both of these companies have had a history of being forced to divest assets because of monopolies effectively in this area. And because both of these companies have so much, let's say, oil field or industrial exposure, the gap in share price you're seeing right now, I think at least, is the market kind of pricing the fact that this won't go through, or it might go through, but GFL might have to sell off some assets to other companies, divest that way. So back in 2021, Secure Energy merged with Tervita. So these were the two largest oil field waste companies in Canada. And I don't know the entire story and how it all went down, but effectively the Competition Bureau forced Secure to sell off some of its facilities to Waste Connections because they just felt like there wasn't enough competition there. And GFL had these issues as well. So the Bureau forced them to sell some waste facilities and tank farms here in Canada. So, I mean, the question here now is, what is the likelihood this deal goes through? I mean, you have the Bureau harping on these companies for many years about effectively having a monopoly in this business, and now they want to merge, or I guess GFL acquiring them. So I can't imagine this doesn't go through some pretty intense regulatory hurdles. And it looks like GFL is buying them for around 13x EV EBITDA. I'm not really sure what the right price to pay here is. I don't know like what industrial waste companies trade for, but if you look to a company like Waste Connections, they often trade north of 15x EV EBITDA, but Waste Connections and like Waste Management, they have a lot of that residential waste disposal, stuff like that. Stuff like is not as cyclical, whereas, Secure is a very heavy industrial oil field type waste company. So I'm going to guess the market believes they overpaid quite a bit because GFL was down. I don't know how much it's
Yeah.
down this morning, but it was down about 10% after they made the buy. So yeah,
Hmm.
the market didn't like the acquisition. It looks like
Yeah, it's
GFL is
down in the last, I'd say it's down about like probably, yeah, 10%. It's down
10%. Yeah.
12.2% the last 5 days. So,
Yeah, I mean, the other element of this could be, they are issuing 4.2 billion in shares. Just quick math on that, 80%
yeah.
shares on a deal where they only have a $19 billion market cap. So, yeah, the smaller tuck-ins in this space are, they are likely to go unnoticed. But when you make a big move like this, I can't imagine, regulators won't be looking at it. If the deal does go through, I would imagine it won't be the end of it. I would imagine, just like they have in the past, they'll kind of force some of these companies to maybe sell off Canadian assets, probably to a company like Waste Connections. I would imagine they're probably just going to be sitting here waiting to buy some of these, but it's kind of an interesting situation. Like the arbitrage in the share price, there is quite a bit, but yeah, it's I don't know if it's going to go through. Quick close, even if it does go through, I expect
Yeah.
it's not really going to be the end of it.
So ASML, of course, we try to look at ASML almost every quarter. One of the most important companies in the world, and one of the companies that's, if you ask a random person on the street, they probably would have never heard of it. So
Yeah.
it's funny. It's a massive company. Most of these comparables that I'll talk about are compared to Q4 of 2025, and overall, I have to say it was a pretty good quarter for ASML. Sales were down 10%, but bear with me, not that
Yeah.
bad here. despite selling 29% less new lithography system than they had just last quarter. So this is likely just a reflection of more EUV system being sold this quarter versus the last one. They sold 16 EUV system this quarter and 14 last quarters. And these are the most advanced systems that they sell. There is this is extreme ultraviolet system, and DUV is the deep ultraviolet. The EUV is what ASML has a monopoly on. So they're the only ones that actually manufactures these type of system. And the DUVs, there's a few other manufacturers, but it's only a small group of manufacturers. So it's really, yeah, it's a monopoly. I mean, I don't know how else to put it when it comes to EUVs, but these EUVs are much more expensive than the DUV. So that would explain the sales being down 10% despite them selling 29% less a new system. 66% of the revenues came from EUV system versus 48% last quarter. 45% of revenue came from South Korea. So I think it's safe to assume that the majority of it was likely purchased by Samsung and the rest by SK Hynix, the memory maker. 51% of sales were tied to memory system compared to 30% for the last quarter. So keep in mind, we had an episode where I was talking about memory and DRAM shortages and higher prices. And I think this is probably these companies starting to invest into more production capabilities here, which likely took some time because it's notoriously cyclical. But these memory system is for things like DRAM or high bandwidth memory, which is used for AI, while logic is for the production of things like GPUs and CPUs. So that's how I would just the big buckets, how to place them here. And only 19% of sales went to China during the quarter. Install base management, which is a very sticky and stable, and actually it just goes up into the right in terms of revenue. That was up 17%. It's been a steady increase over the last 5 years. They did a small increase for their 2026 sell guidance as well. So they went from guiding a mid-range of 36.5 billion euros to now 38 billion euros. So it's looking pretty good. Unfortunately, I could not find their backlog. So I looked for about like 10, 15 minutes. Usually they make it pretty upfront. So maybe I just missed it, but I couldn't find the backlog in order here. And they continue to return money to shareholders via dividends and buyback. They bought back 1.1 billion euros worth of stock in the first quarter and plan to increase their dividend by 17% this year. So very solid quarter for ASML.